Welcome, everyone. I'm your host for today, Nora Ali, and today we are talking about Nvidia. Nvidia was the S&P 500's top performing stock in 2023, up nearly 240%, and that momentum has not slowed so far in the new year, with Nvidia crossing over $600 a share this week. But the big question is, are expectations for the company becoming unrealistic? Here with us to discuss his outlook is Gil Luria, senior software analyst at DA Davidson. Gil, great to have you here. You did initiate coverage of Nvidia earlier this month with a neutral rating and a $410 price target. So why at these levels do you think Nvidia is currently overvalued?
Because to us, any expectations beyond 2024 look to be very unreasonable. So if 2024 is shaping up to be a great year for Nvidia, especially the first half of the year. But anything beyond that, street expectations, consensus estimates, and what the marketplace is implying through valuation seems to us completely out of where we think is reasonable.
Why is that? What's unreasonable about these expectations?
That a quarter of sales from Nvidia are going to two companies right now, Microsoft and Meta. By the time you add up Amazon, Google, Alibaba, and a couple of other companies, you're talking about a majority of their revenue. These companies are buying well in excess of what they usually do. Just to put it in context, Microsoft probably spent less than $2 billion on Nvidia chips in 2022, and will have probably spent somewhere between 6 and 8 billion in 2023. Now that can continue for a little bit, but for a well-managed company like Microsoft, it's unlikely to continue. And in fact, what we hear from Microsoft is they see these chips as fungible, which means that they're stocking up. And when you stock up, that means at some point in time, you're going to stop doing that. You're not going to continue to increasingly stock up. And so we expect Microsoft volumes to start coming down as early as the second half of this year. Similarly with Meta. Meta recently came out and said they need 600,000 GPUs. They're on track to having that by the end of the year. Again, what that means is they're going to keep buying this year, but unlikely to keep buying after that. So we expect the large buyers to start going away, and maybe some of that will be picked up by Amazon and Google. Maybe they're already getting everything they need. All these companies make their own chips as well. AMD makes these chips. So to assume that we're going to come up of super high record volume of Nvidia quadrupling its data center business and continue to grow off of that, we think that's where the logic doesn't quite hold.
Do you think this means then that Nvidia has to diversify away from being so concentrated with these big tech players? And is that possible? And is that going to be enough to compensate for a decrease in spend by these players?
Well, that's their plan. Their plan is to start selling to other companies that are going to use it, enterprises, new hyperscalers, sovereign governments. That's all good and well, only none of those companies have the resources or the wherewithal to put up data centers full of GPUs. Not at this scale, not at the scale that Microsoft, Meta, Google, and Amazon do. And so there's no doubt that there's other demand for GPUs. Orders are coming in that they can't even necessarily fill right now, but not at the same magnitude as what they're going to have from by way of drop off from Microsoft and Meta.
And you alluded to this, but how much of a risk is it that Microsoft, Meta, Amazon, Google, et cetera, invest much more in in-house hardware versus relying so much on Nvidia? Is that a theme that you're seeing a lot of?
Oh, absolutely. And that's what they're talking about. So Amazon's already well ahead of the curve. A substantial amount of the chips in their data centers are already made by Amazon. Microsoft is investing heavily in this. And so you would expect that they would be much more self-reliant going forward, especially if there continues to be a GPU shortage from Nvidia. Right now, Nvidia can charge anything and is charging anything it wants because there aren't alternatives. And if Nvidia continues to do that and there continues to be a supply issue, those companies will lean more and more on their own resources, as well as propping up AMD, which they appear to be doing.
hmm I want to talk about how NVIDIA fits into the overall AI conversation because in your note, you addressed the bull case scenario, the bull case argument that, quote, this time is different. This is not a cycle, and data center spend will continue to grow to 3 to 5x its pre Gen AI levels. And you address that bull case argument and maybe your defense against it. So, how do you evaluate and assess whether AI is in just another cycle? And what is your argument maybe against that bull case?
So generative AI is a hugely disruptive technology. And in fact, it's probably the most disruptive technology since the advent of the internet, which is to say, in the last 30 years. No doubt about that. It's going to change how all white collar workers do their job. And that's saying a lot because most of us are white collar workers. And I'm not wearing this shirt ironically for that. The revolution is huge. But let's not forget, Nvidia has performed better than any of these companies, any other company, because it sells the picks and shovels. And there's only so many picks and shovels you need. You don't, I think the misunderstanding is that you don't have to continuously buy picks and shovels. You buy a pick and a shovel and it works for a while. And that's where we're at now. And at some point, there's going to need to be a replenishment. But the reality is that everybody wants the picks and shovels right now because the gold rush is now.
Mm-hmm.
And they want to start doing all the work on generative AI and see how it can make their products better. And so that's why it's the hyperscalers, the companies that actually build the data centers that operate these GPUs. And that's almost entirely Microsoft, Meta, Amazon, Google, and to some extent Oracle. That's why they're the ones spending on this. They're the ones that are going to help other software companies and internet companies come up with all these fantastic products. But again, by the end of this year, most of them will have all the GPUs they need.
Mm-hmm.
They won't need to buy more picks and shovels next year and the year after that.
So then if you're an investor who's looking at generative AI and you're trying to look outside of just picks and shovels, more broadly speaking, how do you try to capitalize on high growth opportunities and capitalize on generative AI while not becoming a victim of what is overhyped, what is currently overvalued?
Oh, so we already mentioned a few of the ideas. So I don't want to extend the analogy too far, but the mine owners are Microsoft, Amazon, and Google. Microsoft, to a large extent, has benefited from this and will continue to benefit from this. They were early on. They were thinking about this well before any of us was playing around with ChatGPT. They launched GitHub Copilot in 2021. Let's not forget ChatGPT came out end of November 2022. And so Microsoft last year was able to take the technology, commercialize it across its product set, and especially benefit in its Azure business, that business that operates these data centers. Let's call it the mine. Google had the technology early, fumbled and stumbled a little bit in commercializing it, but will get its act together. And AWS will most certainly get its act together. AWS is the biggest hyperscaler. It owns the biggest mine, and therefore it will benefit as well as the AWS business reaccelerates as more and more other software companies and internet companies want to deploy these tools. So those are the obvious choices right out of the gate. There's other companies that are building compelling generative AI products, but it's really early. The only notable company in stock that you can point to that's deployed a successful product that's scaling well and impacting the business is Adobe. And even that's at a relatively small scale. Their Firefly product allows you to enter text and get an image, much like other tools that are available by non-publicly traded companies like Midjourney or OpenAI allow you to do. For Adobe, they've integrated into their product suite, and so they do that well. There's other companies that do things in generative AI that could be helpful. So we talked about Microsoft GitHub Copilot. GitLab has its own tools that it allows you to use to leverage generative AI to write code. JFrog, ticker FROG, operates and manages the binary code. That's what happens to the code that's written after it's compiled. The more code gets written because of generative AI, the more they have to manage. So there's some cases like that where you're going to see a benefit from generative AI. But if we just step back and look at all the software companies that are publicly traded, there's about 200 of them. All of them spent all of last year telling you how great their generative AI tools are. All of them mentioned it dozens of times on their conference calls, how they have these great generative AI tools and their customers are clamoring to get them. 95% of those companies will have nothing this year, will have no revenue benefit at all from generative AI. To the extent that their customers will spend on generative AI, it'll be to the exclusion of other products they would have bought from those companies. So that's where we have this expectation that, in spite of the fact that generative AI is this super important trend, there's going to be some disillusionment this year, because all these companies that made these promises last year are not going to be able to fill those promises this year, probably not even next year. And so you got to really be selective in which companies you invest in based on this theme, because a lot of the promises from last year are just not going to happen.
So would you say this year might be the peak of the hype then, and there's a little bit of necessary correction? And on top of that, bringing it back to Nvidia, what will it take for you to become more positive on Nvidia?
So we may have already passed the peak of the hype. I'd say everybody talking about it at the World Economic Forum is usually a good sign. You know, a couple of years ago, they talked about the metaverse. And
Mm-hmm.
last year, or a year before that, they talked about crypto, and that was the whole conversation. Also important trends, don't get me wrong. Crypto, hugely important trend. We could talk about that too. Um, uh, Metaverse and mixed reality and immersive internet, hugely important trend. But we played through the same cycle. Huge, huge, huge hype. It's going to impact everything, everything all at once. And then we came up with a reality of, well, it's actually going to take time to build these things. It's the same thing with AI. We all get excited about it because it is exciting, and we get to see how exciting it is when you get to ask a computer a question and it answers like a human, or you get to ask a computer to generate an image or summarize an article and can do that for you. It's super exciting. But then all the companies that were trying to build tools last year or implement tools last year realized the harsh reality of, there's a lot of work I need to do in order to make these tools work. If my data is somewhat in my own data centers, on premise, some in the cloud, some in this cloud, some in that cloud, I can't actually run a training model from OpenAI or from Anthropic or anything like that, because the data first has to be in one place and in one way for me to be able to even do that. So I have to go back and invest in companies like Snowflake's product. They are publicly traded. Databricks, not yet publicly traded. I have to do a lot of work on my end to get the data to where it needs to be to generate all these great tools that will help me generate new insights and make everybody more productive. That's a lot of hard work. So I think now that everybody's aware of that, I think we may already be past the hype cycle. What does that mean for NVIDIA? That at some point, by our estimate, in the next 2 to 6 quarters, so 6 to 18 months from now, there's going to be a quarter where they get a lot of their orders pulled, right? And they're going to say, you know, we did 20 billion of data center revenue this quarter, but next quarter, there's an air pocket. We're only going to do 16 or 18, meaning you're going to see the demand roll over. And when that happens, there's going to be a realization that NVIDIA just enjoyed a huge windfall. There's a difference in between a company sustaining profitability and growing it, and a company getting huge windfall and then going back to its baseline profitability. We think that's going to happen. And until that happens, until there's a realization that NVIDIA is a great company, that from let's call it the 2022 baseline, can grow 20% a year for a long time, which is a great business, that's very worthwhile. But everything they've gotten since the generative AI boom, including over the last 6 months and over the next 6 to 12 months, it was a windfall. You can't grow a windfall. Windfalls go away. And so when that realization happens, we think the stock settles at a much lower price. And then you can get excited about it again, because the baseline business is a great business. Very well managed company with very exciting products that are very impactful to their customers. But windfalls don't last forever.
Since you mentioned crypto, a little earlier as a hugely important trend. Let's touch on that very quickly before we let you go. What does drive your bull case for Bitcoin at this point?
Well, Bitcoin is a very important asset class. It has a lot of uses already. Um, People using it to invest in a non-correlated way to other asset classes. People as an alternative, which is an alternative to gold, right? People trading it is a huge use case. Bitcoin's the most liquid asset in the world. It trades 24/7 on many, many venues and it has the highest volumes of any asset. If you're a trader and you're trying to win daily or over time, it's a great asset to trade. There's news flow, there's all the stuff that you love as a trader.
Mm-hmm.
And then there's that background, which is there's still a lot of people that believe that Bitcoin can become all of money, meaning at some point in the future, we're going to be using Bitcoin to pay for stuff, to get paid, to move money across borders. That world would work a lot better than this world. Now, to get from here to there is a really long way, which is to say, there's only a certain percentage likelihood that that happens. But let's say that I believe that there's like a 1% chance that that happens. From now, at some point in the future, 2030, 2050, all of money is Bitcoin. There won't be government currency. Everybody will use Bitcoin for everything in terms of moving value, medium of exchange, unit of account, all that stuff happens. If that's the case, each Bitcoin will be worth $5 million. Now, if you take a 1% chance of that, that's how you get to Bitcoin being worth $50,000. If the universe of outcomes is there's a lot of other things that can happen to Bitcoin and be successful, there's some value to that. There's a 1% chance that it becomes all of money. Just for that, it's worth $50,000. Now, if you believe there's a 10% chance that happens, it's worth $500,000.
Mm-hmm.
If you think there's a 0% chance that happens, it's worth less than it's trading at today. But that's the pivotal aspect of Bitcoin. That Bitcoin, if it lives up to its full potential, will be worth much more than it is today.
Mm. Just very quickly, how do you get to that number? If Bitcoin were to become all of money, each Bitcoin would be worth $5 million. How do you achieve that?
If you look at what all of money is today, it's about $100 trillion. And if you divide that by the 21 million Bitcoins out there, that's about the number
Easy
you
math.
get. Yeah.
Just basic math. Okay. And lastly, where would you say we are in the hype cycle for Bitcoin and crypto overall?
So for Bitcoin, there's multiple cycles. We go through Bitcoin and crypto summers, and we go through winters, and we may be early spring right now. We've come through a winter. There was a lot of excitement about the ETFs. People sold the news once the ETFs were approved. But let's not forget that the dozen or so companies that launched an ETF aren't just going to leave it there. They're now going to go in a process of promoting it. And it's a land grab because there's only one GLD, and there's likely not going to be very many spot Bitcoin ETFs that last in the long term. And so there's a jockeying to get to that pole position. Jockeying means marketing spend. So these companies will go out there and market Bitcoin and try to espouse its benefits and the benefits of investing in it, notwithstanding the irony that that makes it very centralized.
Mhm.
And that very well could lead to another summer. It might not, but it appears to be that we're coming out of a long winter and this could be early spring.
All right, we'll leave things there. Gil Luria is the managing director and senior software analyst at DA Davidson. Thank you, Gil, for your time.